Good morning, everyone. My name is Taryn Sebula, and I'm the Senior Manager of Member Engagement here at the Toronto Region Board of Trade. Thank you for joining us this morning for our valued member VanCity's workshop on the housing puzzle, creating and conserving affordable, sustainable homes. Today's enlightening webinar will offer the knowledge and insights necessary to make a lasting impact on sustainable, affordable housing initiatives within our communities by way of an expert panel that will debate diverse perspectives on the challenges and opportunities that may arise, offering you the opportunity to shape the creation of housing solutions in your communities. Before we begin, I'd like to acknowledge this land on which we are meeting is home to diverse First Nations, Inuit, and Métis people. Though you could be joining us or watching from anywhere, the board's offices are located on the traditional territory of many Indigenous nations. They share with us a sense of responsibility for intergenerational equity, the well-being of today and tomorrow. And now, without further ado, I'll pass the mic over to Eric to get things started.
Thank you very much, Taryn. I will share my screen and get right into it. If I can figure it out. There we go. All right, so thanks very much, everyone, for joining us today. Like Taryn said, we're here to discuss how to create and conserve affordable and sustainable homes across Toronto and the GTHA. With us today, we have a very diverse panel of guests and expert speakers. I'll pass it along in order that you see them on the screen. Julia, would you start and introduce yourself, please?
Hi, good morning. I'm Julia Langer. I'm the CEO of the Atmospheric Fund, which is an agency created by the City of Toronto in 1991, before climate change was really headline news, to address this big global problem of climate change, but what do we do about it locally? And we are now endowed also by the province of Ontario and Government of Canada to advance that mandate of low carbon solutions throughout the Greater Toronto Hamilton area.
Mitch.
Hi, I'm Mitch Gillen. I'm with Hallmark. We are a privately held developer, owner, and manager of real estate across the city, primarily the city of Toronto, across asset classes, so office, retail, industrial, and housing as well.
Ray?
Thanks, Eric. Hello, bonjour, Kwe, everyone. My name is Ray Sullivan. I'm coming to you from Algonquin Initiative Big Territory in Ottawa, and I work for the Canadian Housing and Renewal Association. We are the national voice of the community housing sector, and happy to be joining you this morning.
All right, and I, of course, am Eric Visser, Director of Commercial Real Estate at VanCity Community Investment Bank. I work with a team of account managers and oversee a portfolio of social purpose real estate loans. So we'll get right into it here. Just a very brief overview on housing in Toronto and a bit of a primer on what we're about to discuss today. So as we all know, rents are increasing. Depending on who you ask or who you how you measure or what you're measuring, the rate of these increases varies. You know, CMHC, their latest publicly available data, I think cited about a 6% annual increase in rents year over year as of October 2022. New report obviously coming soon. And, you know, you can compare that with the Toronto Region Real Estate Board reporting on condo rents increasing about 10% year over year as of Q2 2023. And so, you know, I think we all have anecdotal stories and evidence. You know, I work with, like I said, a team of young account managers, and many of them are getting their first or second apartments in the city of Toronto, and the rents that they are paying are, you know, somewhat staggering, frankly. So it'll be very interesting to see updated CMHC data come out soon. But I think we can all just generally acknowledge that rents are increasing rapidly in Toronto. It's becoming an issue. You know, that also is compared with home prices increasing. You know, there's been maybe a little bit of relief in terms of absolute home prices recently, if you're looking to get into the market. However, that's being offset by, financing costs and with rising interest rates. And so affordability on the ownership side of the equation is also deteriorating and not looking like there's much hope on the horizon for some people. At least that's the general feedback that I get from some people anecdotally. That all leads to, of course, shelter needs increasing. And so, I think it can be a little bit heartbreaking to drive around the city of Toronto or the greater Toronto area and see so many people experiencing homelessness and just generally being in need of proper housing. City of Toronto, their Shelter Support and Housing Administration cites in their 2022 annual report that they provided support to over 20,700 individuals. That's after adding 1,500 beds in 2022. That just, I think, is a quick bullet point to demonstrate the massive need for more housing and specifically affordable housing in Toronto. It's not all doom and gloom. The SSHA was able to transition about 4,500 people into permanent housing in 2022. The other part that we can't forget to mention specifically on this panel is that, of course, emissions from buildings and construction are increasing. The United Nations report in 2020 or 2022 cited 2020 data, which showed that emissions from buildings and construction have hit an all-time high in 2020. That's despite increasing efficiencies in the way that we build and operate our buildings. And so really, it's just the increasing floor area out there is outpacing increases in efficiencies that we're finding. It's not all doom and gloom. There are a multitude of programs and grants out there from various levels of government and various organizations. So you have, the feds, with programs like the Codes Acceleration Fund, the Deep Retrofit Accelerator Initiative, Green Neighborhoods Pilot. They created the Canadian Infrastructure Bank, and they're doing a lot of great work on a pretty large scale. And most recently, the federal government removed GST from purpose-built rental construction, and I know that that's already got a number of projects off the ground. Provincial governments, Ontario specifically has a pretty lofty goal of 1.5 million homes to build by 2031. Seems like most of their initiatives, at least with the current administration, are focused on the bureaucratic process and finding efficiencies there. There have been some efficiencies found and some other challenges, I suppose, experienced along the way. But let's not forget that the provincial government does offer a lot of subsidies geared directly to affordable housing and housing supports. And so, the provincial government does do a lot, and we see that at VCIB and some of the underwriting that we perform on various affordable housing projects. Municipal supports, those can, in terms of Toronto, we can look at MIRA as an amazing program, which, I think we all just wish it was able to be deployed at a larger scale. VCIB is very happy to, I think just a week or two, help a nonprofit, St. Jude's Community Homes, acquire a property which they had been releasing for years and was about to be put up for sale, and risk losing those affordable and supportive units, which otherwise were being operated by a nonprofit. The MIRA program was able to provide a straight up grant to St. Jude's, the nonprofit owner or future owner and operator, and coupled with the VCIB first mortgage, we were able to preserve, I think, about 30 units of housing, supportive housing, to be preserved in perpetuity. CMHC, I think many of us are familiar with the various programs that they have to offer. They've got things like the co-investment fund, so various granting and lending options. They've got the Rapid Housing Initiative. They have their MLI Select program, which it was such a great program that they're now sitting at a substantial backlog in applications. To look at it optimistically, it's a good problem to have that they offered such a great program. We also have private foundations. VCIB has done a lot of work with groups that such as land trusts, which are able to leverage private foundation capital, not necessarily in the form of grants. Sometimes it is in the form of grants, but to use that capital in a unique way to help acquire and preserve affordable housing. And of course, we can't forget to mention Julia's organization, the Atmospheric Fund, which has various programs directed at not necessarily affordability specifically, but marrying sustainability a lot of the time with affordability. Just to touch on impact, VCIB, I think is a great case example. I might be a little biased. We are Canada's only 100% impact bank, and a lot of people have to ask, what does that mean? And it's totally understandable. The way I like to sum it up is that every dollar we lend out has to have a net positive impact on the community that it's going into. And so, what does that mean? Well, it's got to be measurable, and we do measure that on every single transaction that we do with a proprietary impact scorecard. What that means is we have various inputs which measure things like community. The community engagement, is it serving underserved groups and to what degree? Affordability, and to what degree is it affordable? As well as the environment. And so things like building certifications, such as Passive House, various LEED certifications, BOMA certifications, the Toronto Green Standard, Tier 2 and above. But also retrofits and how these projects achieve energy savings. So things like geo exchange or solar installations, rainwater collection, those kind of things. Of course, you can't, when you're trying to develop any form of affordable housing, you are going to generally need to layer grants, subsidies, and debt financing. There's a lot of complexity, surprising amount of complexity that goes into some of this. And so you need a lender that takes the time to understand these funding agreements and sometimes come up with unique loan structures and funding structures. So really it's about finding a lender with the ability to be creative and flexible. Of course, that's where I like to think we come in. So please feel free to reach out to me after the panel if you want to discuss anything. But with all that, let's get right to our discussion. So to lead it off, first question, where do you see the biggest opportunity to create new, affordable, and sustainable housing? And maybe this one I'll invite Ray to start.
Yeah, thanks, Eric. And you kind of mentioned in your opening comments that Ontario has set a goal of building 1.5 million homes between now and 2031. But what we also know is that about almost 20% of households in the Toronto area can't afford market rates for housing. And if you look at renters, it's like over 30% who can't afford market rents for housing. So we have to look at that target in terms of who is going to be able to afford those homes. Where is the target for nonprofit, co-op, and community housing in that? Right now, about 4 or 5% of the housing stock is community housing. We need to actually double that, just to get in the range of the OECD and G7 average when it comes to co-op and nonprofit housing. One of the biggest opportunities is going to be government-owned land. The high cost of land is part of what drives up the cost of development. Governments that I've talked to at all 3 orders of government have been telling me, well, we don't have cash for community housing. Yeah, but you have land, and land has value. So how can we prioritize government-owned land from all 3 orders of government to build community housing? And I know I've worked in community housing for almost 25 years now, and we've always been ready to build at that leading edge of environmental sustainability. I used to live in a nonprofit townhome that was built in 1981, the first multi-residential R2000 home. This is not new stuff. I was involved in building the first multi-residential passive home. Those opportunities are there, but we need to take advantage of the land to help bring the cost down.
Yeah, Ray, I think like that dovetails into kind of, I think, the traditional developer answer, which is like, it's all supply. And if we can increase the supply, I think that it's going to create more opportunities for market housing, naturally, but also more opportunities for collaboration between private developers and, not for nonprofit land trusts and other, affordable or social housing providers. And that, if we can open up the floodgates of that land, like we try and buy land often and find these opportunities, and it's hard. It's very difficult to source those opportunities to own them and then start that process. And so starting with that key, like it's the key ingredient that you need is that land side. And there are various levels of government, like you said, Ray, that have access to that. And I think it takes the collaboration between the private sector and public sector groups to unlock that land, or retrofit buildings on that land, working with Julia, to unlock, a different use potentially for it or something.
Well, there's kind of a math that needs to be done in terms of what is affordability, and it has to do obviously with the first cost, like the capital cost of building, the land and the materials and all of that, but then also the operation of those buildings, and then what's your life like when you're in those buildings, and so in that context, in terms of your question about where, it's like where matters. Like if we don't have location efficient construction, then people are going to need a car, which is super expensive to get anywhere. So if we're transit accessible, then your costs of transportation and also your life, your time, you don't have to pay for more daycare because it takes you an hour to get your kid after school, so we need to be thinking really broadly about what and where we're building in order to achieve affordability for the end user. And in that context, like size matters as well. So it's like all the land, all the labor, all the materials that go into each square foot contribute to the cost. So if we're not thinking about like the amount of, like the size of, where you're living, then it's automatically potentially not affordable. This is where, the 1.5 million homes, well, we have to think about like what size and where. And in that sense, one of the things we've talked about, like there's been a lot of talk about the missing middle, like it's not just new land, like it's that infill. And so Toronto's fourplex as of right, I think is going to revolutionize some of this thinking, but also we've started talking about the missing little, like auxiliary suites, like the granny suites, the garden suites, the secondary suites, that kind of thing. Like that land already exists, it's already serviced, and like if you add that up, it's a lot of potential homes. And it also, from an affordability perspective, will help people who maybe are suffering right now with high interest rates, so it will help them pay their mortgages. So I think we need to think really big, like wider, about what is affordable.
I think you're absolutely right, Julia, too, that that where matters as much as what. And I want to give a plug to a fantastic resource from the Housing Assessment Resource Tools Group out of UBC, hart.ubc.ca. They've actually done an inventory in Toronto and Peel and a number of different municipal areas of government-owned land and scored it according to those exactly those kinds of factors, proximity to transit, to amenities, to grocery and retail, and those sorts of things. It's a perfect starting point when looking at those opportunities. And Mitch, yeah, I mean, I think really to get the kind of scale that we need in terms of supply, in terms of both private market and non-market supply, we need to work together, the private and the nonprofit sector. Great organizations like Wood Green in the Toronto area and many others that are doing exactly that. And I hope we can continue talking about it.
Yeah, I like that like it's across the spectrum, right? Is where we have to go big sites. And Julia, to your point, that those big sites take a long time, like just regardless of what we do. And in the interim, the missing little, I think that's fantastic.
I stole that from Cherise Berta. She
okay. Yeah, that can be delivered. It just factually, it can be delivered more quickly. So I think that's really, it's good.
With multiple benefits for affordability, right? So the people who are having trouble affording their existing homes maybe get some help with that. So there's that sort of multiple layers of benefit and affordability support.
Yeah, I'm glad, Julia, that you brought up the laneway and granny suite housing concept. It's something that we're working on at VCIB because the feedback we've got from the market is that many of the traditional banks don't yet fully understand or appreciate the value of a laneway house. It's a bit of a novel concept still to this point. There's about, I think the last bit of research I found was there's something like 38,000 eligible lots for a laneway house in Toronto, and that was before the granny suite or garden suite concept was permitted. So a lot of opportunity there, and totally agree that the missing little is something that can't be forgotten here. Moving on to the next part of the discussion here. We talked a lot about where we want to build and some challenges that Mitch even touched on. But my question is, what is standing in the way of creating more affordable and sustainable housing today?
I'll give the I'm the developer, so I have to play my role, and I'll say, it's the red tape that's holding this up. It takes a very long time when you do have a site to get it through the municipal approval process. The way, like what I say is, in Toronto, each housing project, it's like they're making a custom suit. So you go in, you have the land, and then you go and you talk about everything really specific to the land. And if you believe we have a housing crisis, you don't need a custom suit. You need off the rack. You need vintage. We need all different types of supply to come in, but we can't be perfect. We have to understand we're not going to be perfect. We have to try. We have to create a landscape, a legislative landscape that allows to unlock that supply from a zoning perspective, to standardize these situations. Like with laneway housing, boom, it's automatically approved. Your garden suite, you're entitled to it. Where's that in the middle? Where's that in mid-rise? We had a mid-rise project, the zoning, we hit Toronto's mid-rise guidelines like to a T. It still took us 3 years to get it approved. That's very challenging. So I think there are, and then the next thing is the construction trades to build it. That's the next challenge. Once we figure out the zoning, one of our fears is we're going to start making this leap on the zoning as, some levels of government are saying, okay, here where that transit, we found the where. Now we're going to say, we need the density there, and then we need the skilled trades to build it. So it's a layer of problems. I view it standing in the way, and we need a fully focused, coordinated effort to bring this to fruition. I don't know, Ray or Julia, how do what am I missing?
I think one of the missing pieces is the public, that there has been a lot of sort of reporting about the NIMBY, like people are opposing this, like densification in their neighborhoods, et cetera. And that is, and then that is part of your, red tape, because the role of the municipality is to both facilitates construction, but also look after their citizens and their rights. So I think there has to be a lot that, what's in the way is really not a common understanding of where our city's going. And so people need information. They need some certainty. They need to know that their perspectives and that their real estate values or whatever are going to be actually taken care of and not undermined. So I think that there's, that becomes like, oh, you have to do something. Well, no, we all have to do something. We have to actually have, a sort of perspective, a common understanding from the developers, from the municipality, from the citizens, from, supported by nonprofits, or to see where we're going, why we're going there, what the value proposition is. So I think, just too easily gets blamed on red tape.
I think you're right, Julie, and I think that idea of certainty or predictability is a big part of it. I actually think we're reaching like a tipping point on NIMBY. There's a much larger YIMBY voices, particularly in urban centers, calling for more density, more neighbors, more development. And it's great to see, through with a little bit of pushing, in fact, from the federal government and the Housing Accelerator Fund, that municipality by municipality is starting to allow 4 stories or 4 units as of right, across urban areas. And that's the kind of predictability and certainty that I think will facilitate a lot more housing construction and hopefully even more density, along main
Yeah,
streets
the
and transit areas.
The recommendations we made about how to use the Housing Accelerator Fund and how to actually, in fact, it was about how to get most points for your application, was really a way to include that community engagement in the application for Housing Accelerator Fund money, because then that will streamline your time to, from concept to development, and, just building that in and showing, as I think, it's the value that we are all going to get from this.
Exactly. And I want to pick up on something that Mitch has said. Great analogy about buying a suit, Mitch. And it's so true. Like, so much of our housing is a bespoke development, a custom tailored architecturally and construction wise for every individual site. And that does drive up construction costs. There's a number of groups who are doing really interesting stuff around panelization and offsite construction. I think part of the next step is to actually have prefabricated parts and elements that an architect can design toward, rather than just having those bespoke parts built off-site. A Lego set, for example, of housing elements, the IKEA flat pack of housing construction that can drive down those construction costs and make it a lot easier. 20, 30 years ago, 10 to 20% of housing starts were co-op and nonprofit housing. Construction costs and borrowing costs are so much higher now, it's almost impossible to achieve those kinds of numbers, the kinds of great successes like the St. Lawrence Market neighborhood in downtown Toronto. And we need to see that again. And part of that is private industry and the nonprofit sector working together to figure out ways of building this at good quality at lower cost.
I'm surprised that you didn't talk about, just cost overall, because we're certainly in the retrofit space, and certainly hearing about that in the new construction area, seeing that obviously interest rates and just like the overall cost of labor, overall cost of materials is really, just like increasing the cost of everything. And so I don't know what people are waiting for. Like, are we waiting for just everybody to sort of realize that costs are going to be higher going forward, or like hoping that they go down? So I think that there's maybe a bit of a kind of pause, or, just like not sure where to go. And, so I don't have the crystal ball about like the economic situation, but I think that's certainly at play, just psychologically and technically, right?
Go ahead, Ray.
I was going to say, when I think of the idea of doubling the pace of housing production, where we're already getting constraints and pressure on labor supply and on construction materials, increasing is going to put even more pressure on those and might actually drive up the embedded cost of construction. So we have to rethink the way that we're doing it as well.
Yeah, to the cost perspective, I think we've seen, the market, as of today, let's, look at it on market unit basis. In the city of Toronto, if you want to sell new market housing, the market has been very strong for a number of years. It's not there right now. If you're launching a condominium in the first, say 6 months of marketing, more groups are not reaching the pre-sale threshold they need to get bank financing to start the project. So even if you are selling, you might not be able to sell enough units to start. So that's challenging. And on the rental housing side, we have a project, for example, where from our land acquisition to now, the amount of equity we need to invest, and that was about 2 or 3 years, amount of equity we need to invest to start the project and then borrow the money has doubled. And these are projects in the hundreds of millions, and that, so you're going to put up a portion of that as your equity. So, the GST change helps. It's a start. There's still a lot of changes, and in many instances, you can't start the project because, quite frankly, you have to go and find the money. And that might be it could be from, a market investor. It could be from another sponsor or collaborating group. So there's a lot, there seems to be a holdup in this moment in time on new supply, probably when we need it most.
So I think what I'm hearing is there's a lot of concerns that are shared between both the for-profit and nonprofit sector. Concerns like labor costs in general, financing costs, and really I'm hearing a need for, or a desire for at least, some flexibility from the lenders, which is where maybe I can help. We'll talk, Mitch. Moving on to another question here. I think this is probably one best started with Julia. What's your view on the intersectionality of affordability and sustainability?
Well, I guess I probably sort of launched into that, given that that's a top of mind thing. But I guess just stepping back a bit, the context to which I come at this is that, we have multiple challenges, maybe even crises. We have a climate crisis, which, that's the sort of the main thing I work on. We've had a pandemic, so like a crisis. We have an equity crisis. We have and we've got rising interest rates and economic sort of uncertainty. And so when you're trying to solve like these big picture issues, I go back to a quote from Eisenhower. Don't like to quote the military, but he said, sometimes if you've got a really big problem that's really hard to solve, the only way to go at it is to make it bigger. And so the approach that the Atmospheric Fund takes is like, let's multi-solve. Because carbon is not the only challenge that the world needs to tackle, and people are probably in fact more worried about their economic situation or their health or whatever. And so if we can actually multi-solve our way through this, then we'll have more traction. We'll have actually more capital because there's different resources that go to solve all these various problems. And so we can layer and stack the solutions. So we need a low carbon housing. We need healthy housing. We need resilient housing because climate change is getting worse. We're seeing the impacts right here. And we need affordable housing. So if we we should not talk about housing without talking about all of these important objectives and finding ways to and in fact what we're seeing in the retrofit space is that when we don't pay attention to these things at the beginning, they're even more expensive to deal with at the back end. It's possible, it's technically possible, it's actually financially possible, but it's more expensive. And the reality is that if we don't build low carbon housing, just speaking to the carbon side of things, then we will never achieve our climate objectives. The municipal ones that many municipalities have set, the provincial ones and the federal ones, and then our contribution to the international Paris Agreement. So it's just impossible. The math does not add up if you do not build low carbon housing. So that's kind of the, I think an agenda that we need to, and then, then from the solution side, like that's the problem side, well, it's totally possible. I'm sure you've seen case studies. There are organizations that specialize in this. We have documented how like healthier buildings are when you build them in a resilient and low carbon way. And so then the solution set has to be, okay, how do we pay for all of that? Because everybody says, oh, it's more expensive. Well, actually, not really. But we have to be more creative. And this is why it's great to have a banker on the team, because it really is about, how do we stack up that money? You mentioned that in your slide, Eric. But even beyond that, something that we've been thinking about is like when we make healthier buildings in a publicly funded healthcare system, that's avoided costs for OHIP. Can I have some of that money now to prevent those health challenges that will be caused by poor quality housing? So we don't actually, we're so siloed, and we have to, again, think bigger and think of like who all the players who need to collaborate in this agenda are, so that we can actually come out with good solutions.
Yeah, I love that, Julia. Essentially what I'm hearing is that the intersectionality is not an intersection, it's a 100% overlap. Mitch, maybe I could pass that question to you on the intersectionality of affordability and sustainability. I know I'm very familiar with one of your projects that's taken a deep dive on sustainability, and I know it's a focus for Hallmark overall.
Yeah, thanks. I'm now listening to Julia. I'm feeling more inspired about it, as you know, the initial thing that comes into your mind is it's going to be more expensive and it's going to be inflationary, and that contradicts with delivering something that's affordable. I think you have to, I like this think bigger, or like think to the next level. Like that profit is at a point in time. Think of it over a longer term. We know when we look at it, it's the right decision over the long run. It's trying to make every decision with that longer term view, knowing that there's what's the payback period. And sometimes the payback period, like Julia, it can be a long time. And I'll commend, there are increasingly programs to help you finance that. That's really what developers need. If they can finance it in a good way, you can cover that initial, it's typically an upfront capital cost. So how can, that be better? There's, working with TAF on projects to figure that out. The Canadian Infrastructure Bank, they are, and through their partners, able to provide financing that lets you take that step further. They're able to help you push further beyond, what you might normally in terms of a retrofit to get that. But this is all, it's also very new. And so we need, partners such as yourself, Eric and Julia, to help the private sector who, will be on, we'll get on our soapbox when it comes to zoning, but we can be a bit one-dimensional in our thinking. We need to thinking bigger. I love, Julia, that really resonates with me. We try and do it. I think the sector, you try, but like I said, nobody's perfect with it. You need collaborators to help you get there.
Ray, if you don't mind, I'm going to jump in with the one example, which is not new at all. In 2007, we started talking with the condo developers because that's what was popping up, right? More and more. And they were building to code, not very efficient. And so we said, how can we actually help you through? And we're investors. TAF is an endowment. We invest our endowment. We look for a return on investment, but it's but we look for the impact and for that financial innovation. So we came up with something that basically we called the green condo loan, which was basically we provided the incremental cost of going 25% above code from an energy efficiency perspective. The loan was provided to the developer. And then it was transferred, and it was a separate loan. It was in the declarations that there's this loan, and it's like $2,000 or $3,000 more per unit. But in a very hot condo market, they'll buy the unit down the street if it's $2,000 or $3,000 more per unit. So we just wanted to get that out of the picture. Separate loan transferred to the condo corporation upon closing. They repay TAF because they're the beneficiaries of the savings. So what you and so. There you go. You've got better motors, better lighting, better insulation, better better windows, and you've got your operating costs as an owner are lower. And so and then that helped the city put the Toronto Green Standard in place because they said, oh look, they can build better buildings, and so they raised the bar. So sometimes it's a financial structure. It's not it really is about creative financing to do this. And, another idea is that you can have third-party energy developers. So don't you pay for the HVAC system, get a third party to drill a bunch of holes and put in a geothermal system and then own and operate that system. It's not on your capital costs. They own and operate it, and they're and then the owners have a very affordable and efficient and low carbon system. So I think we're not thinking of the whole picture of who can provide capital, who can actually we were willing to wait 8 years to be repaid on that loan. The developer of third-party systems is willing to go 20 years or 30 years because that's the life of the system. So, that's the partnership and the financial structuring that can help move the dial on this.
That's a brilliant model, especially where it's harder to find those returns on investment in the condo market. They're easier in the rental market, of course, because you end up being the operative building. I want to just quickly share the story from several years ago. I mentioned that the nonprofit that I used to work at, we were involved as a development consultant in creating the first multi-residential passive house certified building here in Ottawa. And after a couple of months of operation, they got their first hydro bill, and it came with hydro inspectors because Ottawa Hydro, when they looked at the kilowatt consumption, they thought the meter must be broken and we'd better inspect it because it was just a couple of dollars for a 40 unit building. So yeah, those possibilities are there.
Yeah, and I think that's a great way to illustrate the, sort of wrapping up that discussion is basically Mitch touched on taking a long-term view. Julia touched on they're not two separate issues. They are two issues that work in tandem. And then Ray, you summing it up with that example, which is, it might be a bit of a higher upfront cost, but that energy savings, if you're operating with affordability in mind, those savings get passed directly to your tenants. If you're for profit, then that gets, hopefully right to your net operating income. And, it ends up with a higher value building at the end of it. And so, multiple ways to attack it. And Julia, I really like that sort of off balance sheet structure approach to the geothermal. It's something that VCIB has done in the past, and we should definitely chat more offline about that on how we can work together better. So I think we did have a few more prepared questions, but I think we've covered a lot of the discussion that or the topics that I was hoping to ask to our panelists. And looking at the clock here, I'm realizing we're almost 15 minutes out from wrapping up this panel. And so I do want to make sure we get time to get to some audience questions. And so just scanning through the chat here, I've got a question coming in which reads, most Canadian government real estate organizations like Canada Lands, Infrastructure Ontario, et cetera, have explicit legal requirements to obtain full open market value for those government properties. How can those surplus government lands be allocated for nonprofit affordable housing development if the nonprofits are forced to pay market value for the land? Ray, I saw you touched on that in the chat there, but maybe you could elaborate for the broader group.
Yeah, so for example, at the federal level, there's a program called the Federal Lands Initiative that allocates about $20 million a year for the federal government to pay itself for market value for all that surplus federal property right across the country, which is absurd, right? There's more than $20 million of that land a year available in Toronto alone, let alone across the whole country. So we're working with the federal government to really change the thinking on that. Sure, if the accounting rules say that if you're disposing of the land, you have to pay full market value, don't dispose of the land. Lease it out to a nonprofit or a co-op for a 99-year lease for $1. You still retain the asset on your balance sheet, but you've leveraged that to create the kind of affordable housing that is also your goal.
Great. Another audience question coming in is, rather than selling government properties, why not partner with pools of capital like pensions to co-own and operate these housing projects? It sort of also ties into something I wanted to touch on with Mitch, was about the potential for partnerships between the for-profit and nonprofit sectors. So, Mitch, do you have anything to respond with to that question?
Yeah, I think it really dovetailed nicely into what Ray just said. Like, yeah, a land lease model is a very effective way if the mandate is to continue to own those lands. Equally, the partnerships that could exist between the private sector and not-for-profit or affordable housing providers are numerous. And when we see, a lot of these, they're coming out through requests for proposals and different offerings right now across the city of Toronto pertaining to the Ontario line. There are opportunities to collaborate with not-for-profits or other providers, and that's what the private sector should be doing. I think the city has kind of been thinking around, we call it inclusionary zoning. That means how much affordable housing is required. Like, the answer to that is yes, there should be affordable housing in all these developments. And like, let's bring the right partners to those opportunities to deliver that housing together. Could there be a better structure of selection of those providers? You know, maybe that's something that could happen before the RFP goes out. Hey, we have this group. We've identified their need in the area. Do this RFP. This is who you're going to collaborate with to bring those parties together. That would work equally as well as, you know, the private sector going out and finding those opportunities as well. But it's, you know, those more groups is better because partnerships work. They take time and they need, you know, I'll borrow what Julia said, they need big thinking and big ideas that go beyond, you know, the near term and sort of look for the long term.
Ray, do you have anything to, oh, sorry, Julia, go ahead, please.
I was just thinking about like that, you know, that sort of the middle little, you know, like the fourplex. So, you know, I think the automatic thinking is that, oh, this is going to be, you know, people who have, you know, their land and they can put up, like, I have a 2-car garage, don't need it, want to put something up there. Okay. But, you know, maybe, you know, I don't want to be a landlord, or, you know, like, is there a way even for individuals to partner with nonprofits, like the scattered housing kind of approach, you know? So we just haven't really kind of, you know, fleshed out the full spectrum of, you know, the models. And then what that provides, you know, you could end up with like a whole bunch of inefficient fourplexes all across the city. So if you actually had a more of a model or a partner who, you know, was even overseeing or helping individuals do that, then you would get, you know, a certain standard of energy efficiency. You know, we need electrification. So we shouldn't be building, you know, we shouldn't have new gas connections, you know, like people aren't necessarily thinking of that. Like you need some overall sort of support, like professional support, because, you know, the individual homeowner is not a developer. So I just think that thinking about the collaboration needs to go right from little to big, you know, all the way through.
Absolutely.
Yeah, go ahead.
To the financing side too, you know, Julia, like that is in a little way building a laneway suite. You are obtaining construction financing, which is, you know, like that is complicated.
People aren't going to do it, right? Like, you know what, they're going to need a helper.
They need, and to everything from how it's built and how to do it. Couldn't agree more to access that and then manage it in the long term. You're absolutely right.
Yeah, it's great that you bring that up, Julia. VCIB is fortunate to work with a few groups involved in scattered housing and operating them as nonprofit. And so I know Mitch and I were talking before this call about one group that VCIB is proud to call a client, and that's the Parkdale Neighborhood Land Trust. And they acquired a scattered portfolio of something like 200 units from the Toronto Community Housing scattered portfolio when that went up for sale a few years ago. They partnered with YWCA to make sure that they could be, you know, operated efficiently and effectively. And that's speaking exactly, Julia, to what you're saying of it's hard to have one-off individual landlords, but then tap into, you know, SSHA funding in order to provide rent geared to income to these sort of tenants that are, you know, facing some real challenges in their lives. You know, VCIB fortunately was able to come to the table with a pretty creative solution, but we did have to leverage some CMHC co-investment fund money to provide some renovation financing. And so this is touching on everything that you just mentioned, Julia, which is acquiring these assets, putting them in the right hands with an efficient operator, and then putting the money aside to green these and operate them cleanly and as efficiently as possible in the long term. And it kind of dovetails into a question that just popped up in the chat, which is about what's the most common combination for layering grants, programs, and financing to build mid or high-rise housing? How can we advise clients the most effective, multifaceted solution that lenders are comfortable and familiar with? As the lender here, maybe I'll start. There's not one single answer. I think that one lever that is increasingly common, and I think lenders have an easier time getting their heads around, is the waiver or deferral of development charges and being able to treat that as a form of equity in your development pro forma. So that's a huge one that if if not deferring, but maybe getting those charges waived outright can make a big difference. And the banks, I think, at least VCIB can quite easily get their heads around that. After that, it gets a bit challenging and nuanced based on which grants and from which level of governments those are coming in. And so, I mentioned private foundations granting capital for affordable housing. A straight up grant, which would then just be used in the form of equity, is the easiest for a lender to get their heads around. It's also the hardest type of funding to access. From there, you have various, CMHC contributions, and maybe it's grants, maybe it's forgivable debt. And those ones can get fairly unique in terms of, the construction lender likes to see development pro forma and the cash flow projections where, we might provide a land advance, but our borrower is going to provide all of their cash equity in upfront. Now, CMHC oftentimes has staged funding. So it's something like, once you're above ground, we'll advance a certain amount. Once you have, enclosed and topped off your building, we'll advance a certain amount. And that provides challenges to lenders. And so feedback that we've got historically is that sometimes that has been a challenge for lenders to, underwrite and assess the risk effectively. But really what it comes down to, in my mind at least, is that lender doing, a full and proper level of due diligence on what those grants and funding applications are. If CMHC is committed and you've got an experienced owner, operator, or developer behind the project, you can be fairly certain that that money is coming in. And to my mind, it can be de-risked quite easily with maybe a tweak to the structure of the loan, or maybe just simply taking that afternoon to read through 300 pages of funding agreements. Ray, do you have anything to add to that?
Eric, I just have a question about how do you, and because you're an impact investor and, this is sort of more in our space, but what do you think about the majority of lenders? How do they take into consideration the operating costs of the building? Because I think design is important. You get, oh, here's my pro forma, but it's your pro forma could be a lot better. And it could be a lot more affordable for the ultimate owner, for the resident, if it did X, Y, Z. And, these are the kinds of things that we do when we get applications for financing, and we help people. So we're more the concierge kind of service on the retrofit side, where we even write the grant applications. We'll write the applications to CMHC because we're the experts on this. And I think that's what lenders are not necessarily doing, and help the clients actually access all of that, but also to push back on them to say, this could be a better project, and I would feel more comfortable, underwriting it if it were like this, because, it goes and all the banks are sort of taking, saying net zero commitments, and they want to have low carbon portfolios. So they're going to have some criteria about what they're going to finance as well. And I would say at the front end, helping their clients access all of those great resources and the third party ones. And I have another good example that I forgot to mention as well, that can really help reduce costs, because parking is expensive. There's lots of great ideas about how to reduce parking a lot.
So a lot to consider there, but yeah, Julia, I think VCIB takes a similar approach likely to TAF in that when we're looking at an efficient building and what its operating costs are going to look like going forward, we can leverage our internal experience. We have a climate finance team, which, they're a separate entity before that we acquired, and they do a lot of very cool work on retrofits, but also have access to a lot of third parties data on hand, and also just connections that we can leverage and tap into when needed. The challenge, I think, or a challenge becomes, working with CMHC, and they have their benchmarks that you need to underwrite to. And it's sort of like Ray's Ottawa hydro example, which was, our engineers might say your hydro bill is going to be $0, but CMHC might say, well, we have a benchmark of $400 per unit. And you have to underwrite with that, even if you're expecting a $0 hydro bill. My figures might not be right exactly there, but I think the theme of flexibility is very key. Ray, do you have anything to add on that?
Well, and the more complicated that capital stack becomes, if there's multiple lenders and multiple funders, it's great that we can stack those things together, but the nonprofit sector is often reliant on multiple partners that way, and they don't always line up, right? And I don't
Yeah.
know if anyone else is a fan of old Hollywood musicals, but Ginger Rogers was Fred Astaire's dance partner. And someone once asked her, how does she feel about dancing with the great Fred Astaire? She says, I do every single step he does, except also backwards and wearing high heels. And sometimes that's the way we feel in the nonprofit sector.
I can't say I truly understand the reference or fully appreciate it there, right? But I do think it's accurate. I mean, even we had a recent.
I'm wearing heels now, Eric.
Yeah. We had a recent success, and I think I saw somewhere in the chat here, Mike from the Ottawa Community Land Trust is on, and that was a recent win for VCIB in terms of our impact mandate, where it was the journey had been about a year, and I know Ray, you were involved at one point. And it basically went from, we're starting a land trust, how do we do this, to, all right, we've got some financial backers from community investors, from anonymous donors. How do we find the financing to a hypothetical building that we're going to acquire? And that capital stack kept changing based on, changing commitments from foundations, changing commitments from individuals, changing interest rates, changing market rental rates, a lot of moving pieces. And, it was a nearly year-long journey, but very happy that the Land Trust in Ottawa was able to finally acquire their first building, preserve, I think it was about 6 to 8 units. But that's preserved as affordable in perpetuity, and it shows the amount of hard work and dedication that needs to go into something as deeply impactful as that.
Hey, Ray, I was wondering, I read that, and that is, cooperatives are not my sort of forte on, but super keen on seeing where that there was like a $1.5 billion
a new co-op housing development program.
Housing, and I haven't seen anything sort of emanate from that. Like it was announced in the budget. That would seem to be, a really solid piece of the puzzle. I mean, obviously that's for right across Canada. How is that playing out? And, is there sort of layering into that could be, amped up?
Definitely. And we're all just waiting on the edge of our seats for the government to announce the release of that program.
With that, I think we should be wary of everyone's time and schedules. So we should start to come to a close here. To me, this session's been very interesting to see the overlaps between the nonprofit and the for-profit sector, but also the attention that should be paid to incorporating energy efficiency and climate-friendly solutions into our built world. And maybe it's something that we need to even double down on and think even bigger. Before we log off, maybe I'll just go one by one to our panelists. It's something that a colleague of mine introduced after some other team building sessions, and that is one word. How are you feeling after leaving this session? I'll start with you, Mitch.
I had 2 words. I was going to say cautiously optimistic. I think.
I like it. Ray?
Similar vein, encouraged.
Julia?
Well, can I have 3 words? Let's do projects together. Oh, that's 4.
Yeah. Hey, I'm there.
But the one-word answer is yes.
Yeah, exactly.
Yeah.
One word is yes. Yeah, I'm definitely feeling very energized myself. And so, with that, I want to say thank you very much, Mitch of Hallmark, Ray of the Canadian Housing and Renewal Association, and Julia of TAF, and of course to Toronto Region Board of Trade, our hosts. Please do feel free to reach out to myself, and I'll volunteer all my panelists as well as being
absolutely.
All right, thank you very much, everyone, and looking forward to continuing this conversation and this very meaningful work.
Great. Thank you.
Thanks so much. Take care.
Thanks,
Appreciate it.